So I prepared a little presentation, if I can throw it up, and I'll share a screen with you.
Yeah, awesome.
So, I mean, as a quick headlines, here's what they kind of put out in terms of the month over month change from where we was, again, showings up 94%, offers, registration up 105%, new listing up, almost 69%. So these things, I think sold over 95%. So month over month, comparatively speaking, were activities way up. Now the week over week glance, again, every week has been improving slowly. The headline numbers are the 25% increase in showings and offer basically across the board increases everywhere.
Outside of the pandemic, like the week over week numbers are huge, right? Like if this happened in a normal week, it'd be crazy.
Headlines everywhere, markets on fire kind of thing, right? But we're just picking up. So I kind of included through this presentation other leading and lagging indicators for where the market's going to kind of just break down this information. And essentially, leading indicators for on the real estate side is showings and offers. Those are kind of the most active indication of what's people's confidence in the market, what's the supply and demand like, right? And so this is from showingtimes.com, and it's for all of Ontario, so not just Toronto, but you can see showing times since the essential service announcement and the drastic decrease, we've been slowly increasing to now we're above showings from last year.
Wow.
Right, so this is weekly average showings, because usually by this time in June, we're starting to slow down. We're getting outside the spring market. Mm-hmm. So we're probably going to see increased numbers over last year in terms of number of showings as our summer market becomes a new spring market this year.
Can anybody see this? Can anybody go to showingtime.com to see this?
Yeah, anyone. It's not a subscription. Anyone can just go to the website and click, and you can click it's for the States and for certain provinces in Canada. They're great at just kind of giving you the overall picture. But I also have this one you have to be subscribed to. This is from Broker Bay, and this breaks down just the GTA. And we did it in the last 90 days. And you can see, again, since the essential service announcement, this isn't daily, adjusted for daily. So you can see certain days are higher than others. Sundays typically are a quiet showing time, where Thursday, Friday, leading up to the weekend is busier. But you can see the highs and the lows are getting higher and higher.
You can see it like every week, right? Monday, Tuesday, Wednesday, Thursday, Friday up, Saturday, Sunday, Monday down, or whatever.
But overall, the overall picture is that people are coming out and looking at properties. And the next correlation with that is the number of offers. And again, same thing as last time. It's not above where it was pre-COVID, but on the rise steadily ever since. Right. And this kind of breaks down the numbers. When they say month over month or week over week, you see the difference here in these showings and offers.
I think I saw one updated for, maybe I'm thinking about a different graph, but I think I saw one where like we're up even further on this orange line. Like the next day is up even further. I think I saw it yesterday, so I don't know. Maybe this is from yesterday, but we're trending in the right direction no matter what.
Yeah, this was posted on June 8th, and it's for that week, right? So again, in Broker Bay, you can obviously click in and get real-time changes in these configurations. Right now, these are my kind of charts that I put together. These are the lagging indicators, and these are the ones that typically make headlines: the number of sales, the average price, how much inventory there is in the market. These, when you look back on the previous month, you can see an indication where the market's going, but it's always a lagging factor. It's not actually leading the change. That's why I call them lagging indicators. So this is the monthly number of transactions. Every color represents a different year. You can see there's a cyclical pattern. And the blue line represents 2020. And so you can see this stark decrease in the number of sales across the GTA. And I highlighted here, this is what makes the headline. So the green line represents 2019, and they often do the year over year decrease. We're down in number of sales, 53%. So that's what the headlines you were getting.
Huge. Yeah.
Which seems huge. And it is a big number, and that's directly proportionate to the demand in the market. So that's what people say, oh, real estate's going to tank because the demand is way down. But the bigger picture is that not only the demand, and I break it down to make the charts a little more simpler, 10-year averages, so you can see without all the other lines, where we're down from our 10-year average. But again, so the sales are down 53%, but so is the number of new listings, new properties. So this is the supply is down. You can see how the charts even mirror each other. Supply went down just as much as demand from COVID.
If you go back to slides, Go back 2 slides. I want to
Yeah.
say, so the
Want to go this one?
2019 numbers, yeah, the green line is 2019, right? You can see how far ahead we were of 2019 at the beginning of
Yeah.
2020. Like we were really, really cooking in 2019 or 2020 at the beginning. And then everything just fell off a cliff. Whereas in the spring
Yeah.
market, it really started picking up last year. And we saw, okay, like the market's getting back to normal. And now, we're heading back up in that direction, but we've lost a few months here.
2017, we had a huge peak in terms of sales. And then after, that heated market was cooled through various mortgage changes, the foreign buyer tax, we quickly shifted to a buyer's market. And we've been slowly, since all of 2018, 2019, been in this kind of balanced market, picking up more and more to seller's market. And really, the start of this year was getting pretty heated, and then was clamped, stopped by the essential service announcement and COVID, right? And so I jump over. Here's the new listings, and this one shows the ratio of sales to new listings. This is an indicator of the market conditions. So you have what's happening on the demand side and the supply side, and how that ratio balances out indicates the market that we're in. So again, when I started talking about 2017, you can see how high 2017 got before it brought back down, and we were slowly on an incline back in this ratio to a seller's market. And then again, we dropped down below a balanced market, but the latest numbers are indicating that we're on our way back up to a seller's market. And that's kind of what we're, in the front lines in terms of showings and offers, is what we're starting to experience again, that we're heading towards a seller's market during this time.
It certainly feels like certain neighborhoods are already there, the neighborhoods where we're in, like, East Toronto, it feels like some things are going well over asking, but then I hear about other condos. Some condos are down, some other neighborhoods are down. So I think it's really driven. This is an overall market look, but some neighborhoods are obviously going to have a different feel as well.
Absolutely. There's micro markets in terms of the inventory stock, neighborhood stock, right? Those all play a factor. Even the number of condos under 1 million, those condos are still moving very well. But the larger condos, the condos that are a bit more expensive, that market is slower, right? And then you can look at the neighborhood, whereas maybe the East End neighborhood is not doing as well as a central neighborhood, or vice versa. And so there's microeconomics when it comes to real estate, as well as the macro as a whole. To get, when we do sample sizes on month-to-month basis, we kind of look at the whole market to get a feel of the supply and demand as a whole, rather than just the micro levels. But essentially, the other indicator here is the months of inventory. So again, it's a lagging indicator, because when the numbers get posted for this month, we'll see, again, a change from where it's at. But essentially, when the market dropped in April, there was a ton of inventory still in the market. Since then, they've either come off the market due to COVID or sold. And so that number of inventory has dropped relative to the sale rate that we're experiencing. So we've gone right from a buyer's market right back to a balanced market, and it's probably on its way by we post next month numbers by a seller's market.
What's your prediction for the next 2-3 months? Were we going to be in a balanced market, a buyer's market, seller's market? Like, it's kind of gone up, down, up, down, and we're right in the middle now. So where's your crystal ball telling you, Paul?
The prediction is it's going to be, for at least until the fall, a seller's market. This summertime, which is usually a quiet time, is going to be, there's a lot of pent up buyers and sellers waiting to buy, upgrade their house, to move neighborhoods, to change their current situation. So there's a lot of people that were held back by COVID. Either one, they were scared to let people into their house, or two, they were scared to go out and look at houses. And as the restrictions are coming down, people are getting back out. So I see kind of just a delayed effect to a spring market until about the fall time, right? So I talk about the average price, and maybe we can jump into what's going to happen for the rest of the year, and maybe talk about what CMHC was talking about. This is the average price. So even though I was talking about, remember how our sales from year over year were down 53%? When I explain the supply and demand side, it explains why our average price is actually up 3% year over year, right? That the supply came down just as much as the demand. And in fact, we're just basically functioning at a new level of production, but still with the same kind of buyers and sellers that are same competition wise.
It seems like it's in the alignment is the number of properties that came off the market is relative to the number of buyers that also came off the market. So
Exactly.
there's enough people that are out there wanting to purchase properties that are not, there's enough people out there that will buy the supply that's active right now.
Exactly. All right, and that's why we're seeing the transition, and we're gonna watch. I mean, the overall picture with CMHC was, they posted a few weeks ago about 9 to 18% drop. Their concern more falls, again, these are the macro level economics, but what's going to happen with mortgage deferrals when those payments start becoming due? What's going to happen when CERB payments are no longer being paid and jobs haven't started back up? So there's those other larger economic factors that are played that everyone's trying to predict for what's going to happen kind of post fall market and where the real estate market's going to go from at that point.
Yeah, because that's a whole different story. Like people maybe not being able to pay the mortgages, maybe there's going to be some more supply. My personal prediction is to borrow. I was talking to a client this morning. She says she's not expecting a waterfall of properties to come on the market. I think there will be a number of properties that do come on from people maybe not being able to sell, but it's not going to be enough supply that's going to satisfy the demand for housing that we already have. So I think that people will do everything they can to keep their houses for as long as possible. So I don't see there being this sudden drop where we're getting thousands more supply than we would otherwise, because people will take on other debt commitments. They will ask family for help. Like, I think selling their house will be the last thing that they'll want to do. They'll want to keep their family in place. So I can see that happening. Some people will last longer than others. Some people will pull the chute right away. I'm like, great, I'm out of here, I got to sell. And other people will take it as long as they can.
No, you're bang on. I mean, real estate's typically the last investment that people choose to unload. Like, you'll see certain luxuries go first, then the car, maybe the extra car, or downgrade in the car. Maybe find, metals and stuff. They'll sell those assets first before they get to real estate. So real estate's usually the lagging factor, and it's more psychological. If there's any fear in the market changing, those have a greater impact, even if people had the money. And that's what happened a lot in 2018 after the change of what happened in 2017, is that we had buyers that were able to approve and could buy, but they didn't know where the market was going. And so they just held out. Mm-hmm. And it was like a stalemate, right? So when buyers are not confident, the demand doesn't show up. Sellers at the same time are confident in the value of their property, especially here in Toronto. So again, when I talk about the market, I'm talking about specifically Toronto. And CMHC, when they talk about the market, they're talking about all of Canada.
Right.
So this, the rural areas and suburb areas, they all function as their own entities. And so when I talk about Toronto, it's definitely a significant demand here, and sellers confident that they can hang on to their properties and maintain their values.
Yeah, I agree. I think, Canada, CMHC has to take a look at what's happening in all of Canada. So when they're predicting 9 to 18% price depreciation, they're talking about everywhere. And maybe that certainly could happen in various neighborhoods and various places across Canada, depending on how badly they're affected. National Bank came out yesterday and said that they're predicting Toronto and Vancouver are going to be the worst hit markets in terms of price depreciation, saying that Toronto would be losing 14% in price over the next 12 months. That feels very, very bleak to me. I don't think we've seen that type of numbers. I was looking at the TREB projection. I didn't get it ready, but basically it's a straight line from about 1975, just in a curve right up to where we are today. And there are some little blips as we go, but in terms of like holding your property from today to 2030, your property is going to probably double in price. And we're maybe have a little bit of a roller coaster to get there, but the property values will go up. And that's if it goes up 6% year over year.
Yeah. I mean, that's the bare bones about real estate, is that in the long term, real estate has always gone up in any city across the world. It's just one of those things that you can invest in, and in 20 years, 30 years, it's going to go up. It's a longer term investment always. When I speak to investors, the idea is to really capitalize on the growth of real estate. It's a long term investment. And you may have, like you said, there was a decrease in the 70s from the OPEC oil crisis, or the 80s housing bubble, or the 90s .com crash. So there's always these little moments that maybe last you a couple of years, but in the long run, if you can hang on to real estate, it pays.
Sorry, I muted myself. It will get you from, it's how Canadians have built wealth.
Yeah.
It's how a lot of people across the world too. You've put your money into it. It's a forced savings plan. It's the only asset you can live in. And it's something that you'll continue to benefit from, and your family will continue to benefit from years into the future.
Yeah, 100%.
Well, that's great, Paul. Thanks so much for sharing that detail. I love the numbers and I love the breakdown, and you're great at explaining it. So thanks so much.
No, always a pleasure to do this, Sean. I look forward to doing it next week with you.
All right, buddy. I'll talk to you later.
Talk to you soon.
Bye.